So what in the world is a HELOC, or a home equity line of credit? Should you get one, and what are the pros and cons? Your home is more than just a place to live. It's a valuable financial asset. And right now, with home values at record highs, you could be sitting on a significant amount of cash without even realizing it. A home equity line of credit, or a HELOC, is a popular way for homeowners to tap into this value, providing a flexible source of funds for a variety of needs. Think of a HELOC as a credit card, but with your home's equity as the spending limit. Instead of a one-time lump sum, you get a line of credit that you can draw from as needed. This makes it an ideal tool for ongoing projects or unexpected expenses. So why are homeowners unlocking their equity in 2025? This year is being dubbed the year of home equity, and for good reason. Homeowners across the country have record levels of equity, and many are choosing to put that value to work. The leading reason remains home improvement. A new kitchen, a bathroom remodel, or a backyard oasis can not only enhance your lifestyle, but also increase your home's value. It's a strategic move, using your home's current worth to boost its future worth. Other popular uses for a HELOC include debt consolidation. With the national average HELOC interest rate in July 2025 sitting around 8.27%, it can be a much cheaper way to pay off high-interest credit card debt. What about major life events? Funding a wedding, paying for college tuition, or covering significant medical bills are all common reasons to tap into your home's equity. How about an emergency fund? Having a HELOC in place can provide peace of mind knowing that you have access to funds for unexpected job loss or urgent home repairs. You could start a business maybe. Entrepreneurs can leverage their home's equity to get their business off the ground. So what's the difference between a HELOC and a home equity loan? It's easy to confuse a HELOC with a home equity loan, but they function much differently. So a HELOC is a revolving line of credit that you can draw from as needed, where a home equity loan is a one-time lump sum of money. With a HELOC, you typically have an adjustable interest rate that can change over time, and a home equity loan is a fixed interest rate over the entire life of the loan. With a HELOC, you only pay interest on the amount you've borrowed during a draw period, usually 10 years or so, followed by a repayment period for the interest and the principal. With a home equity loan, you start repaying both principal and interest immediately in fixed monthly payments. So a HELOC is best for ongoing projects with uncertain cost, or as a flexible emergency fund. A home equity line is best for large one-time expenses where you know the exact cost. So before I get into the pros and cons of a HELOC, I'm Mike Jones. I'm a realtor here in Jacksonville, Florida. And for nearly 30 years now, my wife and business partner Cindy and I have been helping great people just like you with their real estate needs all over the Northeast Florida area. And we are happy and available to help you as well. Do me a favor and click on the like button below. It costs you nothing, but it helps Cindy and me tremendously here on YouTube and on Facebook if you're watching it there. We really appreciate it. So let's get back to the pros and the cons of a HELOC. So the bright side of a HELOC is flexibility. Borrow what you need when you need it. There's also lower interest rates involved, generally lower than credit cards and personal loans because they are secured by your house. There's a potential there for having no closing cost as well. If you have good credit, many lenders will waive application and appraisal fees to get your HELOC. You only have to make payments on the interest. During the initial draw period, your payments can be lower as you're only paying the interest on your borrowed amount. What about tax deductibility? The interest that you pay on a HELOC may be tax deductible if you use the funds for home improvements, but you need to consult with a tax advisor for details. Now for the cons or the considerations. Your home is your collateral. This is the most significant risk. If you're unable to make your payments, you could lose your home. Another con or consideration is variable interest rates. While some lenders offer the option to convert to a fixed rate, most HELOCs have variable rates. This means your monthly payments could increase if interest rates rise. HELOCs also come with a temptation to overspend. The easy access to a large line of credit can lead you to borrowing more than you can comfortably repay. And there are potential fees to be aware of. Possible annual fees or inactivity fees if you don't use your line of credit. So is a HELOC right for you? Deciding whether to open a HELOC is a personal financial decision. With the current economic climate and the potential for interest rate fluctuations, it's more important than ever to weigh the pros and cons very carefully. If you have a solid financial footing, a clear purpose for the funds, and are comfortable with the inherent risk, a HELOC can be a powerful tool to achieve your financial goals. But before you decide, make sure that you shop around for the best rates and terms and consider speaking with a financial advisor to ensure it's the right move for your unique situation. I'm Mike Jones, Jacksonville's Voice of Real Estate. Thank you for watching.